Hi, hello, welcome everybody. Just want to say hello to everybody and welcome you to today's webinar, I should say. And I would like to thank each one of you for showing up and visiting and registering, especially the guys out in Singapore, guys and gals. I know it's like, what, 4:30 in the morning there, so thanks for getting up an extra couple hours early. It can be tough, but it'll be well worth it because we have a great surprise and some interesting information that we're going to go on. And then also for those in Australia, I see that we've got a big contingent down there in New South Wales and Sydney and in Western Australia and Perth. Thank you very much. And for those guys who stayed late in the evening there in London and Paris, we appreciate you joining us. And of course, I always want to welcome the North Americans. Where would we be without you guys, right? And gals. Anyway, I just wanted to because I'm always asked, and I get emails, people want to see what I look like, so I just wanted to give you, my name is Ludovic, Mark Coutinho. I'm the Managing Director here at FFR Trading. We've been in business since 2006, so what's that, 15, 16 years. And there's a picture of me in Egypt. I'm an avid traveler and hiker. I just love going out in nature, and I've actually hiked all over the world from the French Alps in my home country to the Carpathian Mountains in Ukraine, and even down at in the valley of the Nazca in Peru, in southern Peru. I just enjoy being out in the outdoors. That's a picture of me not too far from my home in La Jolla, California. They call it Torrey Pines. I probably hike that probably minimum once a month, sometimes twice a month. It's one of the most beautiful places literally on the planet. Let me go over the background of FFR Trading. I always assume that everybody knows who we are just because we're the big gorilla in the space and the leaders in the industry, but I do want to go over who we are for especially some of the new traders that are online. I mentioned earlier we were established in 2006, and we got our start basically evaluating trading systems, actually doing due diligence on trading systems because we were investors and traders just like yourself. And over the years, we put together markets in the Forex, the futures, the stocks, the options, the commodities, and we help you find, because we have them, and identify very successful strategies that will work with the current market conditions that we face. And we've developed a very reliable 8-step certification process, which is pretty famous. In fact, I got a little kick out of an institution that wanted to duplicate our 8-step certification process. It was a nice compliment, right, when you copy somebody else. And that particular 8-step certification process has made our clients extremely successful. And there's a lot of built-in checks and balances for evaluating any kind of trading strategy or alternative strategy. And I'm going to go over that in a moment. So you might want to just kind of pay attention to this, because if you can get this, and you follow our process, there's not too many words you can use like guarantee, but if you follow this process, I guarantee you'll never make a mistake with your investing. So there's a few I want to go over that are really critical. First of all, when we sponsor and make available a trader and a developer, they have to be referred to us by a trusted third-party reputable source. And that's really critically important. So we will get referrals from well-known brokerage firms, fund managers, financial institutions. So that's key. We don't just have people knock on our door. They have to be introduced to us properly. The second step, which is critical, is that we want to make sure that the experience level of the developer is at least 15 years minimally. In some of our developers' cases, we have up to 35 years of documented history, which is, great. And the third is the back test performance, which is great. Looking at the historical success of a strategy is one way to determine if something's good or bad. But more importantly is we have a lot of forward data, meaning live accounts, and to see if the strategy is performing with what we're seeing in the market conditions today. So that's really critical. So just those 3 steps alone that I mentioned will weed out most of the individuals who are trying to be professionals in the industry. I think the biggest and the most telling step is that we want to see that the developer is trading his or her own account with their own capital. This is critically important, and it usually eliminates about 99.9999% of the people that are in our funnel. And it's a helpful thing. And I'll give you an example. Last summer, I was at the Traders Expo. It's a world event. Literally all the developers and traders around the world go to this convention. And it's sponsored even by TD Ameritrade. And we have to be there because we're, as I mentioned, we're big in our space. So we go there, and of course we have a booth, and I listen to all the developers and look at the hypotheticals and look at all the beautiful graphs and charts. And some of them, we'll have like 2, 3, maybe 4 that I might be interested in. I thought, okay, we're going to begin our due diligence process, and they all know us very well, so they know what they have to do. When they complete out the package, when I say, please provide 2 brokerage account statements of 2, independent brokerage statements showing that you're trading with your own money, you're actually making a living from this. Guess what I hear? Anybody? Guess what I hear? Crickets. Yeah, that's right, crickets. Although last summer there was one individual that we went through the process with, and it looks like we're going to approve of him in the fourth quarter of 2019. So it does work. There are some great developers out there. So this 8-step process has actually led us to learning about specific systematic quantitative methodologies and systems by Mr. Luca Facchini. And he was referred to us by one of the top brokerage firms in the United States. Luca's systems have been auto-executed for quite a number of years through a lot of well-known brokerage firms. So that's the exciting part, and I'm going to be introducing him later on in our presentation. Let's go to the next slide. And that's basically learning the quant system. We use the term quant, but it's quantitative methodologies. And it's a systematic strategy that's designed to diversify a trading portfolio by using non-correlated markets or different time frames or trading logic. So we may have trend following, counter trend, day trading, swing trading, position trading, and so forth. Some of the markets that are going to be traded in Luca's strategies are crude oil, Dow Jones, NASDAQ, gold, natural gas, S&P 500. And these strategies are implemented only on the most liquid financial markets, and that's in order to keep the slippage and gaps at a minimum. So the objective of the strategies is to cover in a systematic, mechanical way all the aspects of the trading activity. So, for example, when to enter into the position, when to exit the position, either at a loss or a profit. The risk controls are robust, and it's the main focus behind Luca's strategy. He's been doing incredibly well, and we'll go into some of the percentages, which, might blow your mind. But if you put that all aside, the real true test of a world-class trading system is the sophisticated built-in management tools, risk management tools that are built in place. So I'm going to go into the quant day crude. Okay. And the logic behind the system is that it's based on pattern recognition, which is the relationship between the day open, the close, and the cross above or below a previous daily or intraday low or high. And what's really unique about this particular system is that Luca has designed the exits both on long and short, so he can be adaptive, whatever current market conditions that we have. The strategy looks to the maximum number of trades as 2. So it offers some nice diversification with a commodity that's not really generally related to the stock market, and that's what a lot of our traders are seeking. Let's go over the quant day mini Dow. Hang on for a second. Sorry about that, a little technical difficulty there. And again, the logic behind the Quant Day Mini Dow is, my slides are moving up 2 and 3 in advance, so that's why. So the Quant Mini Dow, it's based on all technical based system that trades intraday, meaning within the day, we're out by the end of close. Again, the system can go long and short on the mini Dow Jones future contracts. And the logic behind the system is, again, based primarily on pattern recognition. So, for example, the relationship between the day open, the close, the cross above and below the daily high or low. So those entries are usually at the market, and they exist on either based on stop losses, or if Luca reaches his profit target, or if the session's ending, we're out. So the strategy tries to capture the underlying bullish or bearish bias of the overall stock market, and it will trade a max about 2 times a day. So on average, about 20 times a month. So, you know, not too much, not too little, just about right. Let's go to the quant day crude. Same thing. Logic is based on pattern recognition, the relationship between the open, the close, the cross above or below, the daily, intraday, lower high. Luca designed the system so that he can, again, in this market, take long and short positions. And in the same situation, it'll trade about 2 times per day. That's the max. Sometimes it may not trade, if he's not getting the indications, it may not trade for a couple of days in a row. So it doesn't mean that we're going to trade it all the time. But again, it's not correlated with the stock market. So that's the quantitative methodology crude. And let's go over the quant day natural gas. And again, all of these are day trade. Same logics. We're looking at pattern recognition. So for example, again, between the day open and the close and a cross above or below a previous daily day or low or high. So yeah, on this particular strategy, Luca uses the FAST-D stochastic indicator, okay? And he'll probably talk about that later on. This trades once a day. Occasionally, it's pretty rare, but occasionally, if the indicator suggests we do that, Luca will have an overnight of a couple of days. So then the strategy is a mix of a day trade, and then on some occasions, it'll turn into a swinging trading logics, okay? In fact, Luca will be coming in here in a minute and actually go into a little bit more detail on the technicals about the system and walk us through the technical aspects on the trade chart. Let's go to the gold, quantitative gold, moving on. This is one of the most exciting and liquid markets literally in the world to trade. And Lucas has seen some really nice statistics over the last 5 years. In fact, it's been incredible, but he's been averaging over 100% annual average rate of return. Actually, it's 112.9. Truly stunning. This system trades the gold futures market, and again, he's got the flexibility. He can go long or short. Same logic on pattern recognition, looking at the day open, the day close, looking at a cross above or below the previous daily or intraday lower high. This strategy offers some nice diversification with a precious metal. It captures overnight market activity of the gold, and it can enter at any time during the most active hours of the trading session. So to complement the gold system, day trade gold system, generally we always want to pair it with the day mini Dow or perhaps the NASDAQ system. And those systems together have the ability to capture bearish and bullish trending markets on the commodities and stocks. Let's go to the next slide, which is the quantitative swing mini NASDAQ. Again, Lucas had a phenomenal year. In fact, we've had, since the start of 2019, the system has seen almost 40% just in the first quarter. And I see some kind of emails coming in, but the first quarter, even on tiny, small accounts as low as 12,000, he's been able to achieve that 39.6% return. So it's great. This strategy, and because of the conditions that we're facing now, we're looking to see that the second half of the year should even be better. Strategy, again, is technical rule-based system. It takes long and short positions on the mini NASDAQ 100 futures contract. And Luca's trying to capture the underlying bearish and bullish bias of the tech stock market. So he can go both ways, but it can also go short, and it'll trade twice a day max, not all the time, but twice a day, and trades about 20, 25 times a month. So again, not too much, not too little, just about right. Let's go on to the next leg. And by the way, Luca has 7 strategies. We call it the Hepty Pack, for those of you who know ancient Greece. Hepta means 7, so he has 7 specific strategies in his portfolio. So this is the Quant Day Mini NASDAQ. We went over the Mini Dow. This is the Quant Day Mini NASDAQ. Luca has developed the Swing NASDAQ, as I discussed on that previous slide. But I want to review capturing market movements on the NASDAQ on an intraday level. So on this system, Luca is capturing market moves in a 24-hour period, okay, time frame. And the system does do long and shorts after the classic regular trading session. So the markets are globally interconnected these days, and there's a lot of, in fact, fantastic trading opportunities before or after Wall Street closes. The strategy tries to capture the underlying bullish bias of the tech stock market, and it can go long and short, trades maximum 2 times a day. And this one trades about 6 times a month, so pretty low trade volume, or trades in the time period of a month. So let's go to the quantitative swing crude. This is one of the strategies that we love to pair with the Dow Jones or the NASDAQ, swing or day, doesn't matter. They both trade very nicely together. They complement each other because one is a commodity on the intraday level and swing level, and they all have non-correlation, which is paramount. Obviously, the crude oil is a very liquid market, so he's able to capture bearish and bullish trends on a 24-hour market period. Some of the indicators that Luca will use, and I don't want to take anything away from Luca, so I want to go into great detail, but for example, rate of change, adaptive moving average, ATR, your average true range, a zero lag trend, have allowed this system to see some great success over the last 5 years. I mean, really phenomenal success. Last year, we noticed a great return of almost 75%, so we're hoping to see the same conditions this year. So far, so good. Okay, everybody, as I mentioned, we have a special guest. I want to talk a little bit about Mr. Luca Facchini. He's come a long distance to be with us, so I'm really appreciative of that. Years ago, we had heard of Luca Facchini and his methods from a very well-known, one of the top brokerage firms here in North America. And when we saw the results, honestly, we just decided we got to take a deep dive into this and evaluate his quantitative methodologies, and applied our 8-step certification process. And obviously, we were extremely impressed. That's why he's here today. Luca comes from Northern Italy. He actually is a graduate of the University of Bologna in Northern Italy. And for those of you who don't know it, I didn't know this either. It's the oldest university literally in the world. Can you imagine a school was established in 1088? What kind of an alumni group that has to be? I went to the oldest school. I'm a graduate from the oldest school in North America here in Cambridge, and that was in 1636 when they had the original colonies, and I thought that was old. My God. Anyway, his university is a leading academic institute in Europe. Can you imagine 931 years ago? This is incredible. Some of the famous alumni from his universities, and you may know who these people are, Nicholas Copernicus. He was the famous scientist, mathematician that realized that the sun was the center of our universe. And he also, way back then, was known for his quantitative theory of money. Another famed alumni from that university who we have to be thankful for is Dr. Marconi, who was a double E. You know, double E guys, they're smart. Electrical engineer and the inventor of the radio transmission long distance. All of them have great mathematical skills, so I can see now why Luca Facchini has this prowess with his mathematics and computational science. It makes sense. So I'm excited to introduce Mr. Facchini directly to you. He'll have a greater appreciation for his built-in risk management tools and literally the thousands of hours that he's put into developing these quantitative methods. So without any ado, let's welcome Luca and his quantitative systems. And please pay attention because this could put literally thousands and thousands of dollars per month in your accounts. Okay, here we go.
Hello, everyone. Thank you, Ludovic, for the nice presentation. Too kind. And welcome, everybody, for this webinar. I'll try to be not too technical and not too boring either. I think that the presentation that we're going to have is like a nice introduction to the meaning of quantitative quant system or quant methodology. Pretty much means that you want to make sure that whatever you do is based on some kind of rules that's being backtested. In my past profession, I've been a broker for over 15 years, and in the meantime, I was also a money manager, so I saw the mistakes done by the majority of the traders, and they are unable to respect their stops, If you did some trading, you know that. Or when it's time to take a profit, you're going to take the profit too early, and then the market goes in your direction and you lost the majority of the profit. So the best way to eliminate the emotions and the psychology aspect of trading is, in my view, to have a mechanical approach to trading. And once you are able to find a rule or a set of rules that you believe are winners, you're going to be able to test them and see what happened to those rules maybe six months ago or 36 months ago. Because many times you find an edge that lasts just for a few weeks or a few days, and you're believing that for sure you have found some kind of holy grail, but it's not true. The market is always constantly changing. So let me. So that's my picture in my office. The strategies are built by following a kind of a checklist that I developed during the years, and I'll try to obtain goals and objectives that are like reasonable, and especially the risk control. So basically, trying to have drawdowns that are acceptable is like the number one parameter that I look when I start to build the systems, right? Because sometimes you can have systems that they develop in great profit making, but then the drawdown is gigantic, and so it's not feasible for, unless you have a big account, you cannot trade those kind of systems. So it's very difficult to find day trading strategies or even swing strategies that have acceptable drawdowns. That takes a lot of testing and developing a lot of system in order to finally filter out the bad one and come out with the best one. So generally speaking, I find ideas from my own experience or something that I study, and I will try to implement that on different languages. It could be on, usually I use TradeStation for my backtesting, but also I use NinjaTrader or Sierra Chart for other more sophisticated ideas that require me volume profile or market profile. So at the point I proceed with the backtesting process, and generally speaking, I like to see at least 5 years of data, intraday data for day trading system. Generally speaking, I don't go lower than 5 minutes time frame, time period. 5 to 15 for intraday. For swing systems, I like to backtest for about 5 to 10 years, depend on the market, and I usually, generally speaking, use about time periods of 30 to 120 minutes. And for position systems, at least 10 years of historical data, possibly 20 years. So you understand that, I'm going back here 1 second, that if you find something in your day trading or on your observation on swing trading and you think that something is working right now, you really don't know what the same set of rules, if the same performance, let's say, of the last quarter is similar to what happened 1 year ago, 2 years ago, 3 years ago, and vice versa. If you find something that worked 2, 3, 4, 5 years ago, how do you know this is still working now? So that is the reason why the quantitative strategies and create strategies on based on mathematical models and statistical models are the way that the majority of the hedge funds right now are going. I think I just read recently that about 70% of the CME volume is created by automatic strategies. So if the majority of professional traders or hedge funds are using this kind of systems, there must be a reason, because the discretionary trading, unfortunately, in the long run is for sure a loser. Not because maybe the system is okay, but psychologically is going to make mistakes, and is enough one time and you blow up the account. Where a system that does like stops, they're like there's a bracket, like there's a stop, there's a target. You know already that the amount of loss that you can have, of course, there is no guarantee because you can have a crash of whatever, the 9/11, but so those are very black and swan events, and doesn't happen very often. But you have always a stop on the market, and you know already before you start your trading day how much is going to be your loss. statistically, historically, and how much is going to be the max loss of that particular strategy. So you know that if the strategy is in the last 5 or 10 years lost $3,000, $4,000 at the most, and then it comes out of the drawdown and makes your equity high, you know that you're okay, because you have some data that will tell you it is acceptable to lose $2,000, $3,000. But when you have a $2,000, $3,000 or $4,000 loss on your day trading account or swing trading account, then it's very difficult to maintain the discipline to follow your own rules. And to come out of the drawdown is basically almost impossible. Actually, I can tell you that I've never seen any day trader or swing trader that I know, when I used to be a broker, was able to come out of a big drawdown, of a big loss. So again, I just usually test the system, the ideas that I have on a set of data that I call that, in the industry it's called in-sample. And if these results are acceptable, then I run the system on a second set of data that is out of sample. The meaning is that we want to make sure that whatever I see that I saw, say, 5 years ago, for 2-3 years, and it's performing well, how is it doing with the data of a sample of data that it was not part of the testing, right? So it's like we're going to move forward, we'll do forward testing. We are going to use this set of rules that was a winner for 5 years, and we're going maybe now to test that on 3 years of data that wasn't known to the system. Now, if that out of sample test is also positive, then it means that the system is robust, has a tendency to be robust, and the past performance of the first period, the in-sample, is in line with the out-of-sample. If that is the case, it's not simple to obtain that, then at the point I will just create a series of testing on statistical using software and that we use, like to create Monte Carlo simulation or walk-forward analysis, and I'll try to do even an extra out of sample. So basically we have imagine 10 years or 15 years data. I use the first 5 years for the in-sample, second 5 years for out-of-sample, and then I do the third part for extra out-of-sample. If everything goes okay, and all the statistical analysis and the stress testing are still very robust, because remember that it's enough to change 1 decimal on a stochastic or a moving average, and everything changes, right? And the data in the market are not stationary, so they're always changing. It's in a constant changing mode, and so whatever is okay now is not going to be okay 5 years from now, maybe 5 months from now. But if you create something robust, the market will probably go on a drawdown, will probably have a performance that is not perfectly in line with the past, because it's not a straight equity line that's going to be every day we win, every month we win. But if the rules are robust of the system, then there are very good chances that in the long run, the system will be making new equity highs and it will perform again. So pretty much this is what I do when we create the system. When I create the system, then I'll do the incubation phase. So basically, I will follow in real time from few weeks to few months any new system, and I'll try to see if there is anything else that I need to do, some changes or optimization, adding some parameters or changing a few things. And then finally we go live, and we can go live for, it depends on the market, immediately after a few weeks of the incubation phase or just a few months. So these are a few examples of trading that we did with the systems, with the Hepty Pack. This is the day gold. So remember that the markets are always changing, right? So the gold right now is in a weird phase where it does this beautiful breakout, and then it goes in congestion, and it does a lot of false breakouts. So you can see the first 2 trades were very good trades, and then at the bottom of the page you can see that there was a stopped out, right? Because the market it tried to go short again, but the market decided that it was time to rally up and to do some kind of short covering from this short. This is the swing crude oil. The crude oil has been very But this is kind of an older, this is like last month, not 3 weeks ago. Finally, the market started to move this week. It kind of crashed a lot, actually. It was just a 51 today. This chart here is still a 61, so it lost $10. Huge amount of loss for crude, but actually we did well. We had some nice trades on crude this month in the last few weeks. But you can see the swing logic here. You know, the market is going up and down, and you can see a nice trade in the first one, and the second one, the third one, and so these are typical example of trading. Actually, the second one was it went long and then it got stopped out, and then it reversed. Like Ludovic say, there are about 2 trades maximum per day. So this goes 24 hours a day because many times the movement on the crude light are when Europe opens, and so we don't want to be stuck with a U.S. session. A long time ago, the pit session here was very volatile. It was enough to make money by just using the 6 hours that we got in the United States. But right now, the markets are global, so we are forced to develop systems that are basically working 24 hours a day. So again, there was a stop on the long side, and then when the reverse short, and it was a target. Natural gas used to be an incredible market, super volatile, and now it's kind of dying too for whatever reason. But you know, you never know what happened in 6 weeks or 6 months from now. You can see the first trade was a short, it was stopped out, and then the market started to kind of crash, and the system was able to intraday to have a very good intraday trades. This one is the swing and Q trade. Yeah, so this system, developed the system in a way that it will have a lot of small losses around $100, and it will try to capture suddenly the big move. So you'll have like even 10 small losses, 10 small losses, and then you will have like $2,000 or $1,800. This was, I think, was an $1,800 or $1,850 win. So the risk reward is like that. You know, when you lose little. When you win big. So it's not super accurate, but at the end, what matters are the results. And then Q is doing very well. This is the mini Dow trade example. So this is a new system. Also, you can see a couple of good trades here. On the first one is a small stop loss, and then 2 good long trades. We just had a couple of good trades in the last couple of days, especially on the day and Q. I'll go back 1 second. I think I don't have any example here. So the NQ day trading yesterday did an incredible trade for $1,500, and we was able to capture the short side. So again, just to recap quickly the advantages of quantitative strategies. First of all, the money management, the risk control. I'm a firm believer that you need to be able to have a set of rules for any kind of investing or trading. And see, if you don't have some kind of rules, you're a loser, mathematical 100%, okay? Because discretionary trading works well for a few weeks, few months, and then you're done. So the objective again is to cover all the different scenarios that I think you can have in a trading session in a week and a month. So you need to have a stop loss, and risk control is automatic. You don't have to think about it, where I place the stop. The system will do it for you. And also when to exit. The system can exit at the end of the session day, or can exit with profit targets. Each market is different. For a market that are more like return to the means, like the indexes, maybe you want to use targets. For markets that tend to close toward the breakout, could be, for example, even though all the markets now that kind of reversing to the mean for whatever reason. I think there is too much algorithmic trading going on, and so as soon as the market goes out of alignment, they are buying them back or selling them back, or whatever. Some markets respond better to fixed targets, and the majority of the markets, for me, they're better if you let them run. Even the trailing part is kind of, it works well sometimes, but people say, I want you to trading. I'll give you an example today. Today we went short the crude light, and we had an open profit of $1,500, and then the market ended up rallying. If you saw the market today from 150, and we ended up with $500 profit. And some of the clients and some of the brokers say, why don't you have a trailing stop in action? And I actually test that, and if I do the testing with the trailing and the target, I see that in the last 5 years, the results are actually worse. So people think, okay, you can have now, oh, you should get $1,500 an hour, $1,000. But in the long run, again, this goes back to the fact that you have the illusion of the moment. You think that this is the rule that works now. But if you look 3, 4, 5 years in the past, the rule doesn't work. You would have left on the table so much money. So you make 1,000 and you left maybe another 2,000 profit. So each system is different, so you cannot just rely on a few samples. The more trading you have, the more there's statistical base and meaning on those numbers. Again, no emotional trading, we say that. You cannot trade 24 hours a day. Nobody can, but the computer can. And everything runs on servers, so there is no the paranoia of the internet disconnected or whatever. I try to develop systems that don't do over trading, so there's not too many commissions involved, and there's no churning or stuff like that. They're active but not too active. I try to actually the system that trade today on crude light, it didn't take a trade for more than a month. Now, if the filters, the volatility, the filters are not there, they don't give the okay, then the system is not going to take any trades, even if it takes 2 months. Portfolio diversification is very important. You cannot do it by yourself. You need to have systems that will automatically diversify your portfolio in markets that are hopefully not correlated, or it can be even the same market, but you can uncorrelate the system by using different time frames and different logic. So on the mini Nasdaq, I can have a swing and a day trading, and then I can have a breakout logic and a reversal to the mean logic and a trend following. And so there are different ways that you can diversify, even inside the same, in the same market, you can diversify, right? But the ideal situation is that you diversify between across markets that are not correlated, and also between time frames and logics that are not correlated. The systems are, again, I develop everything with top of state-of-the-art of computers and software for my testing, and I do everything I think in a very professional way, and that is the way to do it for me. Again, there is no guarantee in anything in life. There was somebody say one time that if you want a guarantee, you need to go buy maybe it was called a little. No, maybe no. If you want a guarantee, go buy something at Best Buy, maybe a computer to give you a guarantee, right? But besides that, on the market in life, there is no guarantee. But the statistical evaluation that I do and the way I build the system, I think they're pretty robust. And then again, the last thing is that I repeat, the markets are not stationary, so they're always trying to find a way to cut the edge that you just found. So you find an edge, and then slowly the market is getting more and more efficient, probably because there is a lot of artificial intelligence going on and a lot of very sophisticated algorithms. So if I find something or you find something that works now, probably in a matter of 1 year, 6 months, it depends on the edge, is gone. So you have constantly tried to look for better way to improve your system. So the entry rules can change constantly. That's the reason why the majority of day traders are losers, because there is no way that you can beat a computer or professional traders that have much more brain power than you have. The systems are, again, monitored by me and by the brokers 24 hours a day. And sometimes, I need to make some modification to the code because the market completely stopped working, completely out of whack. If I do a system that is based on volatility breakout, and the system said, and the market suddenly start to die, and there is no range anymore. And we saw this in the first part of the year and of the last year. There is not enough fuel, not enough range to capture nice profit. So you can put the system on a standby. You can try to modify a few rules and see if optimizing few parameters you can have some results. Or maybe you just have to close the system and start from scratch and start to develop something new that can capture profits in this kind of market behavior. By using maximum on historical drawdown, or maybe the number of consecutive losing trades or whatever, you can try to figure out if the market is responding or not to the system. All these kind of statistical and numbers and values are not available to a discretionary trader that has been trading for 6 months or 1 year because the sample of trading is too small. And sometimes you're sick, sometimes you don't want to trade, and so the performance is not consistent. And that's the reason why a computer is going to be, no matter what, a discretionary trader in the long run. So that's it for my presentation. I hope that you enjoy, you understand a little more what is quantitative strategies, quantitative trading, algorithmic trading. There is a lot of people talking about that now in the internet, even on the newspapers. It's something that is becoming more mainstream. And I hope that with my presentation you have a little better understanding of what it's all about. And I hope that the system that I created and I will create will help you achieve your financial goals. With that in mind, thank you very much, Ludovic, and I'll say goodbye to everybody, and I'll talk to you soon. Thank you. Bye-bye.
Hi, everybody. Ludovic back online here. Wasn't that fantastic? Oh my gosh, yeah, it is impressive. Luca's quantitative methodologies have been really generating an annual rate of return that just boggles the mind. Anyway, for all of you who attended the webinar today, we'll be sending you a special offer of one of Luca's ebooks and videos discussing his quantitative methods in more detail. So look for that email, and it's absolutely free. The CBOT paid a lot of money for that training, but we're going to offer it for free for all attendees. We also have an exclusive offer for the first 20 of you that reach out to us. We will add, and this is a big thing, we will add an additional year of trading on any one of his Hepty Pack systems, which is included when you purchase the first year. So again, thank you everyone for attending. I appreciate the support and look forward to speaking with you. Bye-bye.